Hello, founders and investors. Welcome back to Next Round Ready. I'm your host, Chris. Today we have Henri from Harlem Capital. I'm super excited for this interview. Y'all don't know this, but we had it scheduled like over a month ago, and my internet was absolutely terrible. It was super embarrassing. It's out of my control, but still embarrassing. So, Henri, welcome to the show.
No worries. Things happen. Thanks for having me.
All right, it's part of the game, man. I've been doing this since 2015. I've done hundreds of interviews at this point. I've lost count, but it's always something. Like I forgot to hit record before. I've had the camera fall while I'm talking, all kind of stuff. So it's always something at some point.
Yeah, exactly.
So I'm excited to hear more about your story and really how you got to this point. But I'd like to start off with this question with investors like yourself. Do you love what you do? Like, do you enjoy being in investment?
Well, I've been doing this now for a decade, so I definitely love what I do. I think, ultimately the job of venture capital is pretty simple. It's to meet the smartest and brightest minds in the world. And so really my superpower has always been networking. And so if my job and my goal is to just continue to meet the smartest person, who's the smartest person they know and the smartest person they know, like that's a fun job, right? And you get to meet people. We're industry agnostic, so we invest in multiple industries. And so you get to meet the smartest minds. We've invested in robotics companies. We just invested in a nuclear fusion company that's creating for like cargo ships. Like how do cargo ships run on nuclear energy versus gas and oil, right? Consumer
Wow.
businesses, enterprise businesses, fashion businesses. We've invested in celebrities. And so it's really cool. Like it's just like it's fun to get to like meet people in different areas of life and understand why are they uniquely, qualified and like take the learnings that the best and smartest minds have learned in different areas of life and then kind of like mush that all together. That to me is like the best. And so I think that's, I used to be in private equity, which is much more metrics driven, late stage financial engineering. The early stage venture is way more human centric. And I personally just like really enjoy the human centric part of the job.
I'm with you on that. I think meeting the amazing people in the startup world is so fun because it's always so different. Like it's never really the same thing. It's never the same people. It's always a variation of something. Like the kind of stories I hear when I talk to founders or talking to investors, I get to learn a lot because I'm not asking investors for money. So like I have kind of like a cheat code of access to different rooms that I'm in when I come in with my microphone. They tell me all kind of stuff, and I really enjoy that. I see it as a privilege, to really be in the space. Is this somewhere that you kind of plan to end up at, or was it just kind of happenstance where you just kind of fell into it?
No, it was destiny, so to speak. I've always loved math. I've always loved numbers and money. Like I started trading stocks when I was in middle school. I was always like really good at math. I bought my first company when I was in college. And so I knew like I was going to be in finance like very early in my life. And I knew my mom and dad are both doctors. My mom used to always say like you have to be an employer, not an employee. And, like that was like one of her like biggest regrets as a doctor was that like she had to like physically work to make money. And eventually she ended up buying like a bunch of real estate properties and doing other business things in order to like not have to be tied to labor for returns. And so I learned that pretty early on. It was actually one of the biggest reasons I didn't want to be a doctor, even though my parents were doctors, was because I saw that like they had to work. And I remember going skiing. I wanted to go on this double black diamond. They're like, oh, we can't go down there. Like we can't risk our hand getting injured because then I can't operate and do surgery. And I wanted to like, I didn't want to have a job where if I got hurt skiing, I wouldn't make money. And so that for me was like business. I was like, okay, I want to make money while I'm sleeping. And like finance was the easiest path that I saw for that. So I knew that early on. I knew because my mom, like I knew I wanted to be my own boss. I didn't think it would be by the age of 26 when we started Harlem Capital, but I knew like at some point. So it wasn't like a matter of like if, just when. And so I think it happened earlier than I expected. But my mom and like just like my desire to not have to work to make money early on, like really was the pathway early in my life to like I'm gonna have to be an owner. The question is just like when is that, and right time, right things happen, or it happened earlier than I expected.
And so when you got to, you said 26, when you started Harlem Capital, who did you have around you at that point in time to really give you that confidence that, okay, I can start my own firm now, and this is the next step for me? Because I think there's such a gap for some people when they get to that point of what's next in the process. I think this is something I hear from founders a lot of. Like, how do you get to the point of, okay, now I can take the leap. I can make this move to go to that next level.
Yeah, we were pretty fortunate. So when I was 26, I worked at a private equity fund called ICV Partners. Willie Woods, who's the CEO, black-owned private equity fund. He was at Harvard Business School in the late 90s, and I ended up going to Harvard Business School, and he wrote my recommendation letter. But like seeing a black-owned private equity fund with $1 billion plus of AUM, which is assets under management, working with him, he was from Detroit, I was from Detroit. You're flying to these like meetings in Iowa and Milwaukee, and you're on the planes with each other, you're in the cars. And so I'm having like multiple conversations with him and the other managing directors who also were largely black as well. Like just like it's like when you do that every single day and you see a black owned firm like buying companies that are mostly white in Wisconsin and in Illinois, it gives you the confidence. And Willie used to always say it like, we know we have a disadvantage, right? When you go into the room and you're trying to get this like all white family owned business that's been around for 50 years to like sell to a black owned firm in New York. Like you have to be super personable, and you have to have like a really good story for like, it doesn't mean that it'd be racist, right? But it's just like there are not a lot of black people in Iowa or in Illinois, and like this is family owned, it's been our family for years. Like why do I want to sell to any New York firm, let alone like a firm that doesn't look like me or doesn't represent like my family, right? And it's like if I was selling my family business, I probably want to sell to people who I thought represent my family. And so you learn a lot like through that experience and process. And so that was a pivotal moment, and we actually started Harlem Capital while we were at ICD Partners as an angel syndicate, and so we were just investing our own personal capital, and then once we got to Harvard Business School, that's when we raised the fund and started investing other people's money. But like that moment for us like probably pulled up the timeline earlier, because it was like, okay, now we can see what excellence looks like. Like for us, I call it Black Boy Joy. It was like I saw what Black Boy Joy was, and I knew it was attainable. I knew, I could like spend more time in years, but I felt like I can do 90% of this job. And not to say like my bosses weren't like smarter than me, but you get to a point of your job, and I felt this way in investment banking too, where it was like, I can do this job. Right. And like, there's like things you're going to learn along the way. I learned a ton of stuff along the way. And there's like a bunch of stuff you don't know that you don't know, which is the power of being young and naive, is like, you just do things because you think you're smarter and better than you are. But like that is like valuable, and it's like I got to the point where I was like, I can do this, right? I feel very confident that I'm as smart as my bosses are. And then once we got to business school, I was like, instead of recruiting, like let's just do it ourselves.
Man, that is incredible. That really speaks to how important exposure is for the youth. And it's something that I hope the investment world continues to take seriously, because I think like the high school kids, some of the college students, they need that kind of access and to be in the rooms, because it's just going to be more helpful. So I have to ask about this because it's something that's come up in a lot of conversations with investors. How much of a role did you going to Harvard Business School play in your career?
I'm sure it definitely helped for raising the fund, right? So, I went to Northwestern for undergrad, did investment banking at Bank of America, private equity, ICB, then went to HBS. And I've been doing Harlem Capital full time for the past 7 years now since HBS. So like what it does is it makes you seem older than you are, right? So when I got into HBS, it was 2017, so I was 26, and like it probably makes you seem like you're 30, right? Now everybody removes like the years they graduate of their schools on their LinkedIn because they want to seem older than they are, and like HBS like does that like times two. It gives you brand credit, validation. And the reality, similar to venture capital, right? Like 40% of, like the most recent stat is 40% of VCs went to Harvard or Stanford for undergrad or grad school that are like at the partner level. And if you look at like who the top unicorns are, they are mostly Harvard and Stanford. Now, are Harvard and Stanford smart? Yes. But I do believe there's like a bias in networking effect of like, because the VCs went to Harvard and Stanford, we're more likely to back these Harvard and Stanford founders, and it kind of becomes circular, and like then they end up winning. The same is also true for LPs. A lot of LPs, limited partners who manage the capital, went to Harvard, Stanford, or like some elite institution, right? Because there's very few seats at these like large endowments or pension funds or whatever it may be. And it's not the case everywhere, right? Especially at the pension fund level, like they are much more like geographic concentrated. But for a lot of like the big endowments, like or fund of funds, like they've come from these Ivy Leagues, and so it does help when like the people who are funding the VCs have a bias towards people who come from their institutions. right? And so you kind of like get into these circles, and that's true for founders. Like you get into these circles where it just helps you have an edge, and there's kind of like oh, you've been there, like you're in the room, right? I always said like just
Yeah.
be in the room, and once you're in the room, you don't have to explain how you got there. And there's many paths to HBS or any top school, but it's like once you're like at the school, like it's like you've been validated, whether you worked at as a teacher, you worked at a nonprofit, or you worked at a private equity fund or a hedge fund, like you all are at HBS, and like to some extent you're all kind of like validated and credentialized, which is the pros and cons, right? Which is why there's like this big backlash against the Ivy Leagues right now. Like people like this is like not good for society.
Yeah.
I see both sides, and I think regardless of what happens, whether it's Ivies or any other system, like there will always be these market leaders of like how people try to like credentialize certain people, right? And right now, it's like if you worked at Anthropic or OpenAI, like you're gonna be automatically like put into a certain bucket, right? So like it doesn't matter if it's school, if it's company, if it's what golf club, whatever it is, like there will always be like these paths that people can see and to say, hey, like you are been validated, like by default, like we think you are one of the best people because you've come from this company or you come from this school. Like that's never going to change. This is human nature. The question becomes like, which system is it? Not like, does it exist?
Yeah, and I think I try to tell founders to try to get access to one of those in some kind of way through relationships, because you can't help it if you lived in the Midwest, right, and you go to not even a
I'm from
bad
Michigan. You go to
school.
Michigan, but Michigan's a great school.
Exactly, right. Michigan, even like UCLA is in the conversation. They're like top 10 with founders. And I don't think that you have to go to the top university. And I think that's a misconception that a lot of founders believe. But I don't think do you think that bias is still present from the investor aspect? Like from investors, are you
It's
seeing more of
biased.
them?
I mean, it exists. It is going away now, not because it's like intentional. It is going away because the market has shifted, and now there is much more validation on engineers and young founders. So, like from a school perspective, like it used to be HBS and GSB, which is Stanford Business School. Now the top schools are MIT, Berkeley, or like Stanford, it'd be like the research school versus GSB, or Harvard, it's the engineering school versus the business school. Because if you look at the top companies, whether it's Anthropic or OpenAI or Cursor, yada yada, like they're mostly like engineer led,
Yeah.
right? Versus the last decade was much more like business led CEOs before. Even Tim Altman isn't technically like a technical deep engineer, like he's more business focused. But like that, like the CEO archetype has changed to technical, and so like the schools have now changed. And from a business perspective, that's also shifted, right? Like if I think about when we started venture 10 years ago, it was like FANG. Like by far the top three places the unicorns came from were going to be Google, Facebook, and Microsoft.
Yeah.
Like that's like where if you came out of like a technical area of one of those companies, like you could raise a $10-15 million round very easily. Nowadays, like actually not that interesting, right? Unless you're coming from like Google Labs. Like what's interesting now is like, are you coming from Anthropic, OpenAI, Cursor, Replit, Lovable, whatever it may be? And so like the dynamic has shifted. I don't think like so people are choosing certain schools. The schools have changed. People still want certain companies. The companies have changed because like what matters for building in the AI world is different than what matters for a software world. But there will always be a top 5, top 10 network that people are targeting, and they'll pay a premium if they come from those top 10 places. That just shifts every cycle based on like what advantages you get in that cycle.
I love the way you put that. That's a great breakdown. Something for founders out there listening. You got to keep that in mind when you're choosing the schools. I'm not saying transfer your school tomorrow. Don't put that on me. But it's definitely something to keep in mind in terms of the rooms that you're in. And I would even say the relationships that you build as a founder. So I would love to hear from you, just overall, some of the things that you really look for that you're focused on with the founders. Because you're one of the firms that in my research, I see you're not just like, hey, we only invest in AI. We only invest in this. You're like, I want to find quality people. So I would love to hear the details on that.
Yeah, I mean, our slogan is all winners welcome. Like, we just want to be around winners. Like, I think, we have certain verticals we like. We have certain verticals we don't like, right? We don't do biotech. Like, we don't do, like, CPG consumer products, etc. Like, we wouldn't invest in, like, Allbirds or Casper. But, like, ultimately, it's like if they're in a vertical and it's not a vertical that we don't like or we hate, then like we're always willing to give you a shot if we love you, right? And the way I think about it is like you have this quadrant, and it's like 4 quadrants, and you have on the bottom quadrant like the market, and it goes from like bad market to great market, and then on the y-axis you have good founder to great founder. the like ideal sweet spot is the top right, great founder, great market. Very rare, and if it happens and the world sees it, it's going to be super expensive, right? That would be you're a researcher leaving OpenAI and you're going to start a new LLM. You're going to raise $100 million. Everybody sees it. The question is like price and who knows the person, right? So if you do that deal, occasionally you'll do it. More likely, what's like 80% of your deals is going to be like good market, great founder, or great founder, good market. And you're kind of like somewhere in the middle, like on the edge, right? And that's, my bias generally is great founder, good market, right? And so I want like an excellent founder. And if we look at like our anti-portfolio, which is like the deals that we passed on or we missed that end up being unicorns or big outcomes, most of the reasons that we pass or miss was because of the market. We're like, oh, the market's too small, the market's too competitive. And it was like, ultimately, you should have just backed the great founder and like let them figure it out, right? Because like, especially the consumer side, the enterprise side may be different, but on the consumer side, it's like Airbnb was a terrible market, which is why everybody passed on it.
Yeah.
Uber was a terribly small market. Like, hey, we're gonna do cab rides. It's like unless you saw the bigger vision, right? Even a Tesla, right? It's like we're gonna make electronic vehicles, which is still today probably like 5% of car sales, would be like a terrible market, right? But there's like all these other things that he's wanted to do, obviously, with Tesla. And so it's like, do you just believe that founder can either expand the market, expand products, deviate, figure things out, whatever it may be. And I think if you get tied to the market, like you miss a lot of opportunities. And so like as a result of like just self-reflection, and we've been doing this now for a decade, like the common thread across our best companies and the companies we didn't invest in was like just incredible founders. And so we're like, okay, well, let's just go back. Like, let's just go to the roots, like the bare bones. Like we know areas that we can't add value we don't like. But everything else, like, it's just about the founder. So it's like doing a ton of references, spending a bunch of time with them, asking them questions, getting to know them, knowing where they spike, like what makes you unique. Like one of the questions I always ask is like, if you walk into a room, like what is the one thing you know for a fact you are better than 99.9% of people on earth, in that room? Or the other way I ask it is like, what is the one thing you are better than 7 billion people on the planet Earth at, and why are you doing this? Right, because there has to be a reason why you think you're uniquely positioned to like start this business that nobody else has found a way to solve the problem that you want to solve. So you may not admit it, but like you're cocky, you're confident, you have an ego, because like you are not explicitly, but you are implicitly saying you are better than 8 billion people on Earth to solve this problem. Right, and so it's like trying to figure out like why you believe that. What are the things that have proven that to be true? That's where like most of our diligence, and as a result, like most of the founders I invest in, I spend more time with. I've done in deals where I've known a founder for 2 weeks, but like that ranges from 2 weeks to 12 years. And my last 2 years of investments, the median is like 5 years that I've known the founders, right, over time. But I can do a shorter deal if there's like a very clear insight and it happens quickly why I think you're in a unique position. Often that is like somebody who I do trust has like made that intro and kind of validated, like that's my level of validation, that's my school or my company. It's like there's a really smart founder who I've either backed or would love to back, and they're saying like this person is that top 1% of this. That like automatically lowers my like bar to get to know you faster, and then maybe I can get there in 2 to 4 weeks. Without that like market signal, and we all do this, whatever bias we we admit or don't admit, then it's like it's really hard for me to like get excited. Like you have great traction, I'm at $1 million of revenue in 3 weeks, but I've never met you. Nobody I know knows you. I have no insight to you as a person. Like the business is doing well and the traction's there, but fundamentally I believe like the founders are the business. And so it's like if I don't actually understand who you are as a founder, I just can't invest in you. And I may lose money as a result, but it's just like something that I personally like have decided is my like investing style.
Wow, and that's a really kind of, I would say it's a more strict approach than I'm used to hearing, but it does make sense because we know that this world is built on the relationships. So what are some of the red flags when you meet a founder? Like, let's say you were excited about them, but then you finally go to dinner with them or you're doing lunch or whatever, and they say or do something and you're just like, this ain't gonna work. Like, it has to be some red flags.
One is like overselling. I don't like people who like oversell their book, like name dropping, hyping themselves up too much. It kind of just feels like, like the bull market we're in, like you're just shooting so many shots. It's like, why are you trying to sell me so hard? Because ultimately you want a founder who's extremely confident in themselves and their business. And it's like, the way I phrase it with us and LPs is when we're fundraising, like, hey, like we enjoyed the conversation. we'd like love to have you as a partner, right? And if we don't, like, we'll catch up with you in like 3 years when we raise our next fund, right? Like that's the kind of like founder confidence I want, because like that's what they need. Like that's what you need to like go on this journey. Like, I don't need you like to oversell me or to convince me like why I should invest. You just like, I'm not going to try to oversell an LP to like invest in my fund. I think the other side of that, is like not necessarily the underselling, but it's like the storytelling. Like so much of this game is emotional, and so I need to like feel something. And so if you're just like so numbers rigid, or like here's my TAM slide, here's the customer product roadmap, but there's never like a vision. There's never like, why are you doing this? There's never like you found like customer insights, or like you had a job or you were whatever, and it's like this was the moment I realized I had to do this because I kept coming against this and like nobody was solving it, so now I have to solve it. Like that emotion translates to like every other part of your business. Yeah. Right? It translates to like, can you raise capital from me and from others and from downstream? Can you hire talent? Like in a furiously competitive market where like 24-year-olds are making $500,000, can you convince the best person to like not go to Anthropic and to come to your company? Right? Can you convince a customer who is getting like inundated with like dozens of AI tools, like choose your AI tool over the other tools? Right? Like every part of your business, like you have to create some emotional connection to people, business, talent, capital, whatever it may be. And so like I'm trying to like signal for that. And if you can't make me feel that, like why would I believe you can make others feel that?
Oh man, that is so important. I try to tell founders about that TAM slide. Like it feels good to put on there that we can reach 1 billion people.
I mean, you can just show it. It just doesn't. It only matters so much. Yeah, it doesn't do much anymore.
And so, okay, I want to talk a little bit about the other part in terms of the pitching. Because I just think too many founders kind of skip over this and they want to kind of rush the process. And I do find that one of the problems, I've talked to over 100 founders in the past month about this, and they all told me that their first time talking to an investor was when they were pitching. So I think that's kind of the first problem. And I also think the second could be like nerves or whatever. But what advice would you give to the founders who are pitching you or investors at your level?
I mean, so there's nothing wrong with the first meeting, like being like the call, because like every founder I talk to can't be like a founder who I've met personally, right? And that's like who made the introduction. I outbound to a lot of founders, so I DM a lot of founders as well to talk to. So that's fine. I think it's just more, it's a long game. And if it's not this company or this round, like the founder I just invested in 2 months ago, I met 5 years ago. I passed on his last company. He grew that, raised $80 million, and he just left in January to start his next company. And like every 6 months we met, like, and we just like would do Top Golf, or we would talk, or he came to one of my dinners for Art Basel in December. And so it's a very long game, right? And I passed on him, and now I'm investing in him. So like, I made the mistake the first time. And so I think it's like just removing some of that, like the tension of just like, we're just building a relationship, right? Like, yes, like whether you're pitching or you're not pitching, and founders love to always say, like, I'm not raising, even though they are raising. And I think that helps, like, maybe mentally for them, like, this is not a pitch. I think that is like a good, like, hey, like, we're just like having a conversation. That's why founders like to say that, even though they are raising. And so just like build a relationship, because ultimately it's two-sided, right? It's like, yes, like if you're a good founder, you will have many options. And some founders like may only have one option. You have to like, you just choose that option, right? But if you're fortunate, you'll have at least 2 options. And so the investor has to choose you, and then you have to choose them, right, between them or others. And so like you are building a relationship over time. And everybody knows now, like, venture is longer than it's ever been. SpaceX went public after 17 years. And so like you're making like pretty long-term decisions. I always tell founders, like, because founders like to get back to work, and they always say, hey, I want to stop fundraising. Like, it's been like a week, it's been 2 weeks. You're making like decade decisions in like 2 weeks, which is fine. I get it. You want to get back to work. But like, don't like over rush that because you're just so antsy to get back and build, like, and you think 1 week away from the business. Like, having a bad investor is way worse than having a good investor. Like, the magnitude is like something like the way somebody said it recently was you can't turn your kid into like an Olympic athlete, but you can like make your kid like a drug addict.
Right.
like you can like mess your kid up like a lot worse, and you probably have impact like on actually the upside of like making your kid like the thing that you want to like happen. And so it's like, to some extent, like, do what you can to like give them parameters, but like get out the way Like let the kid like do what the kid's gonna do. The same is true for like VCs and founders. It's like when they need help, like yeah, what do you need? Like one of my founders just recently was like, I need help with go to market and engineer hiring. Cool. Otherwise, it's like I'm not like in the business day to day, right? And so just kind of like think about that, and it's like, hey, like these are big decisions. And like a bad investor really can like ruin your business. I've seen it dozens and dozens of times, whether it's in our portfolio or outside of our portfolio. And so I think people kind of underestimate how valuable or important that decision is and how quickly they make it.
Man, that's a really good point. And I think founders, it's easy to overlook that because I try to tell founders don't raise when you're desperate because that's when you're going to make a bunch of bad decisions. If you're just desperate for money because you're out of runway or whatever it is, you just put yourself in a bad position mentally, financially, where you're going to make poor decisions that will make it way worse in the long run. I'm working on a series on that, on like the dark side of venture is what I'm calling it, to just talk about that kind of stuff. Right, like I want to really like highlight just how bad it can get, because once I started researching it, I realized like this could get really ugly, even in terms of the company falls apart, and now what do you owe the investor? Or let's say you did raise, you had a big exit, but you gave up so much equity that you had $1 billion exit, but you don't feel like you had $1 billion exit. Like, I don't think we talk about the dark side of this stuff enough, and founders should be aware of this as they're raising capital.
I agree.
So, man, I got one more question for you. Are you I see the content you guys put out at Harlem Capital a lot. I love what everybody on the team is doing. I'm seeing the YouTube stuff. I see, I think it's Nicole with her, the newsletter. It's a lot of content, what made you prioritize content this way? Because most firms kind of overlook it, but I think it's one of the things that separates Harlem Capital from all the other firms out there.
We love content. It comes from the top down, which is important. And to some extent, we kind of competed in the beginning. We're like pushing each other, follower accounts and did you do your posts, etc. And then over time, we kind of each found our lane. We're like, I'm a writer, which is why I do the Forbes op-eds, and Brandon's obviously the video person, etc. And so you find your lane, right? And it's like, how do we push? And when we started early on, we were just like 5 guys writing 25K checks to the LLC, and it was like, okay, why would this startup take our money? And it's like, okay, well, let's like merge our money together versus taking 5K checks. You can take one 25K check. Let's like create a logo and a brand. Let's have a website. And so we kind of like, people thought we were fun well before we were fun, because we had that brand and we were getting press and we got Forbes and Black Enterprise. I think like once we saw that advantage, it was like, okay, well, let's just double down, because this is working. It's leading to us getting better founders and sourcing. It helped us a lot with like LPs, and like getting into meetings and people knowing if we went to pitch, like they already knew us or they saw it. And the same issue for founders. It's like, oh yeah, I saw that post or I saw that vlog or saw that podcast, right? And so it, brand is like, what do people say about you when you're not in the room? And so it's by the time I get to the room, whether it's a founder or VC or LP, it's like I want them to have a perceived notion and I want to curate that story myself, right? Versus like either you have no story of who I am, or you have the wrong story, right? The wrong story is worse than no story. And so if you're going to have a story, it better be the right story. And so we want to own that, right? And obviously, like, Andreessen did this the earliest of anybody in terms of like owning their own media, and partially because they were like anti-media, but like, I credit them for like building their own media platform and owning their story. And I think other funds have obviously followed suit because it's worked well for them. But like, I think for us, it was like we wanted to own the story from a diversity perspective, and that's obviously evolved and shifted. But like, we just felt like there were no voices of color in the room. Yes. And we were getting like press and panels and stuff early. We're an angel syndicate writing 25K checks. Like, why are we like getting invited to these meetings? Why are we getting asked to do these press articles? And we were like, because there was literally like when we started this in 2016, 2017, like there was like nobody else. There was like 1 or 2 other funds, like, well pre-George Floyd. And so like, they're like, oh, this is cool. Like, we want to talk to you guys. And we're like, oh, snap. They're doing this for $25,000 checks. Like, imagine like when we actually raise a fund. So then once we raise a fund, it was like, let's keep doubling down. Because like we've seen the power of what this has done for us. And then it kind of, then we enjoyed it. It became fun. We actually like it. We think it's powerful. One of our like core like beliefs is you can't be what you can't see. And for us, like that was working at ICV. We did programs like SEO and MLT. And so we'd been around like Black excellence like for a long time, which really inspired us. And so for us, it was like, how do we be that light for other founders? Even if we don't invest in them, like we just need the community to know this is possible. And that was really important for us. And that's why we started the intern program, which we've now had 145 interns. It was like, we just want to create more flywheel effects of winners, of diverse people, whether they're investors or founders, like with us or without us. It's like that inspiration is important. And, SEO is a finance program that I did that got me into investment banking. And one of their slogans is, it's not about you, it's about those before you and those after you. And so that's kind of just like been ingrained. It's like the DNA of the firm. And all of me, Brandon, and Jared all did SEO. And so like that like mantra is like a part of the DNA of the firm. And I think media is the best way to like enable that versus like mentorship is great, but like mentorship is like one-on-one, not scalable. And we're tech investors. So like everything we do, we want to do is scalable. We want to have the largest intern program ever had in venture capital, which we've created. We want to have like the largest brand in venture capital. We hope to have the largest vlog ever in venture capital. So like the way we think about it is scale. And so it's like in a scalable way, like media can create micro mentors versus like, let's have like 3 people who we mentor. Great. It is helpful. I'm not saying mentorship is not wrong. That's just not the way our brains operate.
That's a good idea. You're giving me an idea talking about this, because that's how I first learned about you guys a few years ago. And I just got another good idea where you were breaking this down. So that's kind of how my mind operates. Kind of like I'm in a unique position in this startup world. So content is kind of like my main thing. It was my main thing for a long time. And now in the past 2-3 years, I've gotten deeper into the investment world in a really different way. But I like the position I'm in. It's really unique. And it just allows me to just learn so much and just stack relationships, to create a bunch of opportunities. So, man, I'm not trying to keep you forever. I'll make sure I put a link to all your content and everything that you guys are doing down in the description, in the show notes, so people can go and check it out. But Henri, thank you so much for being here, being an incredible guest.
Appreciate it, man. Thanks for having me. Good questions.